Hello, good to see you all and welcome back to my presentation. The first, let me introduce myself. My name is Cẩm Nhung and here is Hồng Hạnh. On behalf of Group 10 in tutorial 3, today we are going to talk about Sacombank. We have divided our presentation into 6 main parts. If you have any questions, feel free to ask my team after the presentation. Let's start the presentation with a brief introduction about Sacombank. Sacombank stands for Saigon Thương Tín Commercial Joint Stock Bank. The bank was established in 1991 in Ho Chi Minh City. It has nearly 570 transaction points in 52 over 63 provinces in Vietnam, Laos, and Cambodia. Especially more honor when Sacombank achieved the rank of top 500 largest banking branches in the world. So now we move to the market outlook. We have 3 items: financial crisis and COVID-19 pandemic, macroeconomic, and overview of bank condition. So as you know, since 2020, the COVID-19 pandemic has a big impact on the economy and society on a global scale in general and in Vietnam in particular. So the COVID-19 outbreak had brought the challenges which are the forecast to have significant impacts on the development of Vietnam economy. From 2021, the global economy has gradually recovered, but is still facing an uncertain short-term outlook due to the emergency of new strains of the COVID-19. So at the same time, the whole country is fighting against the COVID-19. So what are the conditions like at the Sacombank? No, condition, yeah. In the past year of 2021, Sacombank operations still continued to grow strongly, and Sacombank also strengthens customer support and contributes to the fight against the COVID-19. Yeah, so now we move to the credit risk part. The first element is loans classification. In short, loans are divided into 5 categories, which can be summarized as flow. The group 1 is standard debt, group 2 is special debt, group 3 is substantial loans, group 4 is doubtful loan, and the last one is lost loans. In the 5-year period 2017 to 2021, Sacombank's standard loans nearly doubled. The significant growth is mainly due to the bank credit growth, and group 3 substandard loans decreased significantly, only 1/3 in 2021 compared to 2017. It can be seen that the group 1, group 2, and group 4 tend to increase, while the group 3 and group 5 tend to decrease. So we next, the second element is non-performing loans. It's easy to see that the Sacombank bad debt is not too large. Moreover, the ratio decreased for 5 years from 2017 to 2021. Starting the period of bad debt 4.59% in 2017, this will continue to decrease deeply to 1.47% in 2021. From a bank with the good financial capacity and stable development, after merging with Phương Nam Bank, Sacombank faced nearly a large amount of bad debt and outstanding assets, accounting for 30% of total assets. However, after 5 years, Sacombank has a very positive speed of bad debt handling. The bank had recovered nearly 72 billion of bad debt and outstanding assets, reaching nearly 70% of the overall plan. And Sacombank reduced the bad debt ratio at the beginning of 2017 from 6.68% of the total debt to 1.35%. We come to the next part about the liquidity management. We also have 4 elements: A&M profile, structural liquidity, net liquidity gap, and LDR. About the ALM profile, in February 2019, Sacombank cooperated with PwC Private Limited to implement the project upgrading and perfecting the asset liability management framework. We also call ALM. Yeah. The second is the application of Basel II standards have Sacombank to raise the level of risk management. Capital adequacy ratio is around 10%. Minimum level is about 8%. Yeah, we move to the structural liquidity. Sacombank faced the most liquidity risk with the financial obligation in the 1-month term growth and ensures the liquidity in the long run. Sacombank is meeting the requirements of the State Bank on the roadmap to gradually reduce the ratio of short-term capital for medium and long-term loans. So the third part is about the net liquidity gap. Sacombank net deficit in the period 2017 to 2021 is positive and increasing continually. However, Sacombank faced liquidity risk for short-term bucket. So I think Sacombank needs to have a plan to increase the liquidity management. And the last thing about the LDR is called loan to deposit ratio. LDR ratio in the period 5 years is always below the 18% in compliance with the regulations of the State Bank. And the increase in LDR ratio has bank reduced pressure in mobilizing capital and lending more. More lending means a higher liquidity risk, reduce the bank profitability, and Sacombank still ensure the bank profit. About LDR ratio in 2021 is much higher than the average rate of a joint stock commercial bank, and rather than greater in comparison with different banks category. And the last one is Sacombank has well managed the liquidity risk in the period, maintain the LDR ratio below the legal ceiling of 85% and ensure the bank's operation. Yeah, that's it. We are halfway to the today's presentation, and now Hồng Hạnh will be in charge of the rest, please.
Now we come to the interest risk. Interest risk is the risk of fluctuating income and the net value of banks when market interest rate fluctuates. The interest risk management is the base organization of a department to identify and quantify the loss caused by IRRs. In order to control the trends in interest rates, the bank examines the interest sensitive gap between RSL and RSA. We can see from the table the an increase of 1% in interest rates leads to the increase of net interest rate income for 1 to 3 months and over 5 years, but the NIIs of under 1 month, 3 to 6 months, and 6 to 12 months reduced. These figures here show the Sacombank has positive gap for 1 to 3 months, 1 to 5 years, and over 5 years when the risk main range time rate stays negative. Next, we move to the next interest rate margin. We can see that the needs of Sacombank steadily increased from 2017 to 2020 and have a slight decrease in 2021. This increase is a result of the considerable increase in interest income of Sacombank. We come to the scenario analysis. According to the risk management methods, the scenario analysis can estimate the portfolio expected value with given periods. In 2021, the GDP of Vietnam continues to decline to 2.58 2.55%. This is the lowest in the past 10 years. Despite the low GDP growth, Sacombank profits experienced an upward trend over the from 2017 to 2021. Both the growth in the national economies and bank performance illustrates the potential of Sacombank credit growth as well as the profit earned in the next few years. Here is the inflation rate. Look at the table with CPI, means that the consumer price index. It measures the average trend over time in the price paid by urban consumer for goods and service. It's also the instrument to measure inflation. We can see that the CPI in 2021 is the lowest, means that the inflation rate is well controlled, made due to the weak demand and rather slow cashing. Here is the hedging proposal of Sacombank. From 2017 to 2021, Sacombank entered into forward and foreign exchange swap contract and allowing customer to transfer, modify, or mitigate the adverse effect of foreign currency market fluctuations or other market risks and other business purpose. The two most commonly used derivatives during the periods were swap and forwards. It can be seen that in 2019 and 2021, the utility of the forwards contract trended downwards, while the swap price sloped upward. And in 2020, the both swap and forward contracts experienced a stable growth in popularity, almost doubling in number by the end of the period, started with both currency and interest rates. We have a reviewed Sacombank current credit, liquidity, and interest rate risk analysis, as well as the scenarios on the impact of income and capital on the bank hedging proposal from 2017 to 2021. If you have any questions, please let me know.
And thank you for the listening and goodbye.